Well, shifting focus to the commodity markets, Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, we've been looking at the base metal prices, but I'm looking at ferrous metals right now. And while steel prices continue to see profit taking, we've seen prices decline even below 3,900 there in the Chinese markets. But iron ore prices have been trading on a steady note. So we've rebounded above 117 right now. We did see prices decline to 115. We've done 120 in the previous week as well. But when you look at the overall prices, I mean, this is the range that we saw the last time in the month of March. So strong gains coming back in case of iron ore, at least some stability definitely coming back. The month of April was quite good, 16% of gains into that one, and that was the best month since June 2023. Iron ore prices have started to pick on back of stronger data that we've come in from various international markets, especially China. Just to remind you that China is on a holiday right now and reopens on 6th. So this move that we are seeing is on lower volumes on the Dalian exchange. There is lower guidance also in sense of production from Fortescue Australia. There are various mines which are looking at issues there. And last year as well was lower production there. And this year as well, a repetition of that is something that the street will want to keep an eye on. Having said that, when you look at the Chinese ports, the inventories are right on the higher side. The markets are getting support from the fact that the China steel exports have gained up by 25% in the month of March. This is year-on-year basis there. China also in the last couple of months has been relaxing home buying restrictions after 13 years of restrictions onto this one. The other sore point really could be that this quarter, which also is about summer and monsoons in China as well, could lead to lower demand from the markets. So you could be looking at some resistance coming in at certain levels here. The imports, pardon me, in China in the last year was at record 1.18 billion. But the markets do believe that this is a target that China perhaps will not be able to do in this year right now. Coming on to prices then, and we've seen an all-time high of 229. This was way back in 2021 in July. And from there, by 2022, we did see a very sharp correction come in for the iron ore prices as well, almost to 85. Now, this is a level that we saw 23 actually start with. But by the time the 23 as a year ended, we were quite on the higher side in sense of iron ore prices, almost to the tune of $145 a ton. As you can see, it was a good gain in the last year, strong gains in what we saw in sense of demand and Chinese buying as well. Now, 145 is where we started this year with, and there was a big correction. We saw the prices fall below $100 as well in the month of April. May has been kinder. We've seen 118, 120 kind of levels, and the markets do believe that while $100 is where you could be looking at as an average for the iron ore prices, the worst case scenario clearly is at 90 on the lower side, and the best case as 125 on the higher side. The street believes that this is the range that the iron ore prices can trade within for all of 2024.